Welcome to our VC series. So glad you could join us. It'd be great, I suppose, Olivia, to get a quick kind of introduction on yourself and kind of forums philosophy, first of all, if you like.
Yeah, of course. So I am Olivia. I am a partner at Forum, where I've been for the last 5.5 years. A little quick bit about myself. I've spent most of my career sitting at the intersection of product and marketing, both at big and small organizations, building kind of zero to one. So have launched dozens of new products and services and communities, ranging from McDonald's dollar menu and their mobile order and pay app to the Wall Street Journal's Journal House and different digital ad products. So have really enjoyed those sitting at that zero to one building phase. Prior to Forum, I was managing product and innovation at Dow Jones, and our whole function was sort of around developing new products and services from zero to one. So it was lots of fun, and I love getting to do that and spend time with entrepreneurs at Forum. Zooming out then to Forum Ventures, we're an early stage B2B SaaS fund, accelerator, and AI studio. So we want to be able to support founders anywhere on that zero to one journey. So we have an AI studio where we're building companies alongside founders from basically day zero, doing that kind of concepting alongside early stage founders. We have an accelerator where we're investing in post-product B2B SaaS companies, helping them go in that kind of initial traction, getting them their first few customers, and then helping them to raise that subsequent round of funding, and then have a more traditional pre-seed seed fund where we're investing in folks just a little bit later who already have some commercial traction, some early customers, and then helping to accelerate that. So that's me and Forum in a nutshell.
Excellent. Would it be right in saying you had your 10-year anniversary recently? Yeah.
We did. We did just celebrate 10 years. So our CEO and managing partner, Mike Cardamone, 10 years ago, saw an opportunity to help support SaaS companies at the very earliest of stages. So took a bet on that thesis that SaaS was going to continue to grow. And a huge bet on himself, and raised a very small first accelerator fund. But yeah, has been great to see, everything that we've accomplished over the last 10 years, and very excited of, next 10.
Yeah, and I'm going to test you. Do you know at the top of your head how many companies you've helped or invested in that 10-year mark? I'm sure you have it at the tip of your tongue.
Yes. So we actually just went through a whole website revamp. So we're going through all the numbers to make sure that we had that for our website. But we have funded 430 companies to date, which is really incredible. And yeah, those companies have gone on to raise more than $1 billion in follow-on funding. So we've worked with a lot of early stage companies, and hopefully that number will only continue to grow. We're at a point now where through those kind of 3 funding vehicles, we're writing almost 100 checks every year.
Yeah, brilliant. And just going deeper into, your approach, obviously quite a saturated market, even in that particular niche of B2B SaaS. How do you ultimately differentiate yourself in terms of operational support, would you say, Olivia, versus some of the other venture capitals that are out there in that space?
Yeah. So what is great, our team is made up of kind of former founders and operators. So many of our partners and managing directors have started, sold, raised venture-backed dollars for companies that they themselves have started. And I would say the sort of 2 main areas that we focus on with the founders that we work with is on that kind of go-to-market and sales acceleration. So we find that a lot of companies kind of live and die in this stage of being able to truly validate a problem, do great customer discovery, but then actually sell this product and continue to kind of grow on the initial go-to-market side. So we spend a lot of time helping teach people those fundamentals, but then also supporting them in that. And then the second area where I would say we spend kind of most of our time is then in preparing folks to be able to successfully fundraise. So while we have a lot of, multi-time founders, a lot of the folks that we are backing are first-time founders who maybe were the first institutional check into the business. And when they go out to raise, their seed round, it's sort of something that they're doing for the first time. And so we spend a lot of time thinking about everything from, how do you create a winning pitch deck and tell a great narrative about your business to how do we help get you kind of in front of the right investors and put together a data room, all those kind of little things that go into the fundraising process. So go to market and sales is sort of our operational sweet spot where we're spending time with founders. It's a little bit different on our studio side, obviously, because we're actually building the product, have a full kind of engineering team. But for companies in our accelerator or pre-seed fund, we are focused on kind of go-to-market and sales as the place where we're leaning in most.
Yeah, great. And there's obviously a lot of kind of scrutiny on financial metrics right now, and evaluating the kind of financial worth and potential kind of upside revenue wise and profitability wise of startups right now. How are you assessing that within your current portfolio, and what particular kind of metrics are you evaluating there, would you say?
For companies we're thinking about investing in, or companies within the portfolio?
In your portfolio, in terms of
Yes.
what are you measuring in terms of what their success looks like right now?
Yeah. So I think some of the things that we look at, we're obviously doing kind of quarterly reporting from our companies. So we're looking to continue to understand revenue growth. We're looking to understand churned revenue every quarter. Obviously, we're keeping close tabs on burn and how much cash is in the bank.
Yeah.
Obviously, it has been a very challenging fundraising environment, although we are starting to see, I think, positive signs, at least from our portfolio, that things are opening up, and we're seeing more rounds getting done from our end than even six months ago. But we want to make sure that things are healthy from a revenue and churn standpoint. Obviously, churn sometimes is that early signal that things might be stalling or challenges are happening. But the other one, obviously big one for us, is just making sure when it comes to cash on hand and burn, what that looks like, and obviously runway of the company. So we're making sure that we're flagging things early if we're seeing stuff to make sure to get ahead of any issues that companies might be having.
Is that the same as you mentioned external? I mean, if you're looking at investing at companies right now, are there similar metrics, would you say, or are you giving them a bit more kind of leeway still?
I mean, I think there's a couple of things. Obviously, at the very earliest of stages, it's hard to underwrite risk because you have oftentimes very few data points, and we love being kind of first institutional check into the business. We say to folks like, especially out of our accelerator fund, like if you've been told by other VCs, like you're too early, like we would love to talk to you. We want to be able to help get in early and really work with you to accelerate the traction side of stuff so that you are in a better position to be able to raise a larger round of funding. I think what we like a lens metric wise that we care about when we are thinking about investing in a company is like obviously market size, and thinking about, does this have the chance of becoming, $100 million ARR business? Like what would the path look like to get there? Obviously, there's lots of businesses out there that are creating tremendous value for their customers that aren't necessarily venture scale outcome businesses. And we are obviously in the game of venture. So a lot of what we are, thinking about initially is, what needs to be true for this to become a $100 million business, and what's the path look like to get there. We are also, though, thinking from a financial health standpoint of the business, especially, if we're writing a small check through our accelerator fund, which is only, upwards of $100,000. We also want to make sure that we understand the current burn and runway of a company, and like what does $100,000 get you. Obviously some people are not in positions where they're maybe able to go full time, or they're able to actually put the resources that they need with $100,000. So that is something that we're mindful of. And in many instances, we'll try to help support founders if they're like, hey, 100K kind of gets me like a couple months, but I really
Yeah.
need, 300K to get what I need and feel like I have, the time to actually build and validate.
Yeah.
So we'll try to help, in many instances, like help pull some of that round together. But we
Mm.
have seen that pre-seed stage is still very challenging, like that kind of
Mm.
maybe no traction yet or some early
Yeah.
indicators. So I think that's something that has changed. I would say over the last little bit is like we're
Mm.
definitely being more mindful of, what does $100,000 if you're going through our accelerator actually get you, and
Yeah.
like can you actually make the progress that you need with that investment, recognizing that it may not
Mm.
be as easy as it has previously been to just pull in another, 200, 300K.
Yeah. Yeah. And Olivia, what I wanted to cover next, I suppose, is the VC platform. I know you've been very vocal on kind of your own thoughts about, the I suppose the impact of the platform to the portfolio companies, how you should evaluate the performance of, a VC platform, looking at KPI metrics. I know you did a blog on this quite recently, which was very insightful. So love to get your thoughts on, how you see the role of that platform maybe changing now, and how is it being measured? How is that how has that evolved as well, I suppose, over the last 12 months?
Yeah, it's definitely evolved a lot over the last 12 months and,
Mm.
maybe even more so in the last 5 years, from when I started in this world until today. Um, I think if you rewind 5 years ago, there were a lot of funds who were saying, hey, we've seen, A16Z and a couple other funds roll out this like support function to
Mm.
great
Mm.
success. Huge differentiator for them. Like we should also have this too. And so I've
Yeah.
seen sort of that proliferation across funds. And I think in many instances, people rolled it out as like anything that's not investing and helping the portfolio is like what this function is going to be. But that is pretty all encompassing and can lead you down a whole number of different paths. And so
Right.
I think for a while, it did operate as sort of this like catch-all role.
Mm.
I
Mm.
remember going to a VC platform summit many, many years ago. And one of the takeaway items that they gave people was this tote bag that said, let me know how I can be helpful, which at the
Mm.
time I feel like expressed sort of what the role was of like this catch-all, whatever you can do to support
Yeah.
these founders, but felt in that, desire to be helpful is also
Yeah.
super unstructured and like chaotic.
Yeah.
Um, I think what we've seen now is one, the maturation of the function. So there are more people who have a perspective as to how these functions should be run. There are
Mm.
lots of funds that now have operating partners who are kind of overseeing this function. So I think
Mm.
there's more and more case studies that people can kind of learn from. I think the other reality too is investors want to ensure that all of the money that they have for operating capital is being spent
Right.
well and that they're efficiently spending that money. And so
Mm.
you as a platform leader, you want to make sure that it's very clear, I think, the impact that you're having towards
Mm.
the things that move the needle for your fund. And I think as a partner or managing partner of a fund, you also want to make sure that all the people you have in all your roles and the way
Yeah.
that you are allocating resources is driving the best outcomes for
Mm.
for your funds. And I'm sure you've heard lots about this, but it's hard also out here on the venture side, raising from LPs right now. Like that has been, Carta has
Right.
had some interesting stuff that they've pushed out recently, but and PitchBook, but we're just seeing,
Mm. Mm.
less and less LP dollars going to emerging managers. So it's
Right.
harder, it's hard for funds to be able to raise their subsequent funds. And
Mm.
yeah, so I think there's a lot more scrutiny, but I think that's a really
Yeah.
positive thing. I'm a huge advocate for the maturation of platform as
Yeah.
a career path, and that I next week will be publishing something that's actually about an overview. I did a survey about how different funds
Yes.
are
Yeah.
measuring
Interesting.
KPIs, and it is
Yeah.
interesting to see that there are still funds that don't really have very hard and fast KPIs for their platform teams, but it's
Yeah.
really promising and exciting to see that many of them
Absolutely.
do, and many of them are focused on driving what I would say are some of the key functions of a fund. You know, they're driving pipeline
Mm.
for their investment deals, they're generating revenue for these companies, they're, you know, getting checks cut in from
Mm.
investors. And so I think that there is a lot of, I'm very excited about kind of that progress.
Yeah. Interesting to, see the results of that survey. I noticed it go up the other day, and I think it's the right approach. I think having that structured kind of KPI kind of overview will ultimately help and benefit everyone, right? Whether that's the LP, the partners, the startups. And I suppose my next question is on the back of that comment in terms of how are your startups, would you say, benefiting from your platform approach right now?
Yeah, that's a great question. So part of our platform approach is focused on the sourcing piece. So that
Mm.
actually doesn't really even touch, you know, our portfolio, but we see that because we're a high volume investor, we're writing a lot of checks, that a huge priority for us as a fund is being able to invest in win some of the best founders out there. So
Mm.
our kind of goal as a team this year is that 50% of the companies that we invest in are coming from the platform team. So all as we're thinking about events and content and ways that we engage with folks in the ecosystem, we're thinking, you know, how do we get the most relevant people from those experiences into our
Mm.
pipeline? And hopefully some of those come out on the other end as investments. So we're off
Mm.
to a we're off to a good start. I think we're at like 42% right now for H1, but I think have a
Okay.
very clear path to getting to that 50% in the second half of the year. And then
Mhm.
in terms of how people are taking advantage on the other side, we maintain a very high founder NPS. So we're surveying founders very frequently to understand their experience in working with us. Do they feel
Mm.
like joining Forum was a good decision for their business? Has that
Mm.
accelerated their business? We're tracking like things like initial revenue when we make the investment and how that is growing over time. And then
Right.
the one that is in my brain right now, because I just put together a postmortem on this, is we run these investor processes where we help prepare people to fundraise, we help them secure their initial meetings, and we kind of help
Mm.
quarterback that process. And so we we had we just supported, we have 22 companies right now that we're supporting with fundraising. Eight of
Mm.
those companies have either closed or are closing rounds.
Yeah.
And so some of the things that we're tracking there is, you know, how many meetings are we booking for these folks?
Mm.
Um, what kind of how much money are we actually generating for them in investment, total investment across
Yeah.
the companies that we're supporting? And that kind of fund through rate. So what is graduating into that kind of next bucket? So we fund through rate is sort of the North Star of how we think about
Yeah.
fundraising support, but on my team level, you know, there's a lot of smaller kind of leading indicators that allow us to ensure that founders feel that, and
Yeah.
that they're able to not only feel very prepared to fundraise, and that's more, you know, NPS and qualitative feedback that we're getting from founders, but
Yeah.
that they are able to successfully fundraise.
Yeah. Yeah. Great. And obviously that's an interesting perspective when you're kind of inward looking in terms of how you can help the portfolio companies. I suppose from that outward perspective, obviously there's a lot of companies that want to work with you, that want to strike up a partnership with you. How do you kind of evaluate, what's best for you from a partnership perspective, and what partnerships best to entertain that are ultimately going to help your portfolio companies?
Yeah. So one of the ways that we think about this is sort of key, we'll call it like key inflection points or needs of
Right.
companies within the portfolio. So one example that I will give is our team will spend time with the founders, kind of blocking and tackling their narrative and pitch deck. And we feel like our team has a lot of experience with writing and creating pitch decks. And so we'll help companies with kind of that first draft. But if you think about having 22 or 30 companies that you're helping simultaneously over a given period of time,
Mm.
with that, we don't have kind of the in-house resources to say like, hey, we're going to design your deck. There's
Yeah.
and do every slide to slide edit. We know tons of funds who have that in-house designers, which is an amazing resource. And so that's an area where we might say, hey, we think it's super valuable for people to be able to have a polished pitch deck that has a strong narrative and great visual design. We think that's really important to the fundraising process. And we also recognize that it takes a lot of time, and it's not every founder's skill set to design a presentation that looks incredible. And so that
Mm.
might be an instance where we say, hey, this is a really great opportunity. And this is an area we've done a partnership in the past of like, hey, let's find some folks, maybe one, two, three people in our network who
Mm.
maybe have worked with companies before that we've gotten really great feedback from, or
Yeah.
people with our network have shared, and figure out how we can embed those people into our experience. And it might be something as simple as, hey, we're just going to refer everyone out to these three people. Like, these are
Yeah.
the best people to do this. We've gotten creative as well. If we can say, hey, like, can we figure out a way to maybe get a little bit preferred pricing for our portfolio companies, but we're going to send everyone your way. So
Mm.
there's those kind of key value points are definitely places that we start, but we've gotten kind of creative with people in the past in ways that our biggest goal is like, how do we drive value for our founders, and finding those inflection points and the people that make most sense is usually where we start.
Yeah. And is there a particular common kind of trend right now across all the portfolio companies in terms of where their pain points are, would you say, Olivia? I mean, obviously fundraising is number one, as always you could argue, but is there a common pain point for a lot of those startups
Um,
portfolio?
Common pain points. I don't know if I would say there's one that is immediately coming to mind.
Mm.
I think in the early days, a lot of the founders that we invest in are technical founders who have never had
Mm.
experience with sales. And
Yeah.
so I think that's often a pain point for people.
Yeah.
Um, we have a lot of our team has amazing go-to-market and sales experience. That's definitely an area that we do a lot of like programming and resources and support.
Mm.
We also have some people in our like next degree network that can kind of help with that. Some as
Yeah.
simple as, how do we make sure that people are having more discovery calls and like getting more people on the phone?
Yeah.
And we've established partnerships with like, lead gen agencies like RevBoss to help like even just book some of those initial discovery calls so that people can actually
Yeah.
start improving that, iterating and learning. So there are definitely, um, if we sat here long enough, there's probably a bunch of different areas that I
Yeah.
would be able to
Absolutely.
tell you that thematic
Yeah.
areas where people do have challenges, but
Sure.
yeah, I think the initial sales one is a big one,
Yeah.
for especially for technical founders that we're working with.
You mentioned earlier that, you obviously invest at a very early stage. Some of these founders are first-time founders. So
Mhm.
how do Olivia Forum really nurture and develop those particular leaders? You need development and nurturing, I suppose, not only as a first-time founder, but sometimes as a third or fourth-time founder, right? You could argue. So what is the approach there in terms of implementing and enhancing, I suppose?
One of the filters and criteria that we use to evaluate potential investments is coachability as one of
Mm.
the kind of traits that founders should possess. At the end of the day, we'd like to be very hands-on investors. That's our preference. And so we certainly try to suss out in that investment process, like, is this person open to being coached? Is this person interested in having this type of support? So that's sort
Mm.
of a base layer. But yeah, it's a challenging transition for a lot of people, and something many in our portfolio have expressed, of kind of going from founder to CEO. So, when you're just two people or three people and you're kind of working on stuff, it's very different than as you start to build out a team and you have to become, the leader of that organization. So
Yeah.
we are definitely spending time with both programming resources to
Mm.
help founders think about, how do you, build good cultures? How do you become a good leader? How do you make that transition from founder to CEO? And what does it look like to be able to grow into that? Our head of platform, Danny Pico, has done a great job of thinking about the connection between our founder community and how
Mhm.
we bring some of that institutional knowledge from folks who have been there before and inject that back into some of these earlier portfolios. So we'll often bring alumni back at certain inflection points who are maybe Series B and beyond in the
Mm.
portfolio, to share some of their learnings and insights and missteps from as they were building their companies. We do the same thing when it comes to fundraising, of like, founders very candid of like, things I wish I would have known or done differently, or like,
Yeah.
now that I have done this a few times, like, this is how things have changed. So she's done a great job of kind of building that connection. And one of the things we're continuing to think about is like, how do we continue to make it easy to be able to exchange those and connect people who are a couple steps ahead and a couple steps behind. We're getting
Yeah.
a big group of founders together in September. We're taking them to essentially summer camp. And
Yeah. Yeah.
our goal with that is, a lot less around like, how do we give you these kind of strategic sessions that you're gonna walk away with feeling leveled up, but really, one, how do we create a space that gives you a chance to like relax,
Mm.
compress, and connect then with this wider portfolio. And our hope is
Mm.
that you are going to meet a bunch of people who know a little bit more than you do, or who are a few steps ahead, or who have
Yeah.
gone through something that you are experiencing right now. And that by, driving that cross-pollination in an environment that is very relaxed and kind of childlike, playing lots of
Yeah.
games, things like that, that people walk out feeling really, really refreshed, but also that they've been able to see around corners by meeting those people that they otherwise would not have.
Yeah. And I suppose creating that sense of community, and I suppose the investment in the platform, and really highlighting the strengths of the platform is so important right now to differentiate you from some of the other VCs out there. When when there's a good start in a tough economy, it stands out, right? If they've got a good runway, if they're going to hit profitability in a couple of years, if they've got some big clients on board, they can probably pick and choose, I would imagine, in terms of which VC they go with, as opposed to knocking on their door and begging them. So
Yeah.
is that why there's this focus on the platform, on that sense of community? Because obviously you've got a strong track record of 10 years, which we can't
Yeah.
forget. But yeah.
Yeah, I would say yes. Yes, I think we believe that, the platform that we are building allows us to differentiate from a lot of the funds that are out there,
Mm.
and truly provide great support for our portfolio companies. But the other piece of it as well is, venture is such a game of flywheels and relationships in many senses. And so part
Mm.
of what I believe, and I would say Forum does as well, is like, all of these things compound on each other. And we've backed, we've backed founders multiple times who's like we backed a founder whose first business failed. Their second business we invested because we
Mm.
had this existing relationship, and then their business was acquired by DoorDash, and we just invested in his next company. So
Nice.
there are, there are, we just see like, there's a lot of interchange too between investors that we know who then become founders, or investors who we know who then become LPs, or founders who
Mm.
like, there's a lot of interchange that happens
Right.
in that ecosystem. And I think
Mm,
our belief is like the more that we are able to show up in a way that leads with value for all of those people, like the better that
mm,
we are in the end. And the truth really is like so much of Forum's ethos is like low ego, high EQ people. We're going to lead with value. And we want to make sure that whether you're a founder, you're an investor, you're an enterprise customer, whoever it is out in
yeah,
the world, that you feel like the experiences that you have at Forum are very non-transactional and are
yeah,
striving to make you better in what you're doing, make your job easier and elevate you. And I think our belief is like in continuing to do that, that will only compound over time. And like, that's why cities like San Francisco or New York are such good tech ecosystems because it all continues to feed back in and
right.
founders who have great exits reinvest back in those communities. And I think it's why you've seen in a lot of other, to compare it to a city. I'm from Chicago. Like Chicago
Yeah.
hasn't really cracked figured out their tech city thing, but they have had very few instances of founders reaching that ultimate pinnacle
Yeah,
Groupon, but very few others who have then like
right.
reinvested back in the city. And our belief is like if you keep investing in these people, like
Yeah,
they'll come back to you and often in ways like you didn't expect, but you need to make sure that, every experience we have with an investor who could invest in one of our companies or a founder that they feel like, wow, Forum is different
yeah.
and like they care about me.
And I suppose you're the expert here, being from a kind of a marketing background. But I suppose that's the brand recognition that Forum brings right to the table. That everyone knows that you're going to bring value to all walks and really provide them with the right network, the infrastructure, and obviously capital to help them scale. So I suppose like you say, that's kind of it's a snowball effect.
Yeah.
And to ensure that you provide that to all kind of stakeholders, therefore, is really important.
Yeah, and that, the world of venture can sometimes suck and it can feel
Yeah,
very exclusionary and that it's
right.
like us versus you. And our goal is anytime we have an event, what like an experience, whatever, anytime you interact with us that like we're sitting on the same side as the table as you feel like warm
Yeah,
and welcomed.
right.
And even on our like event side, we have an amazing community manager, Nia, who does like just such thoughtful and incredible inclusive events. And I feel like when
Yeah,
I'm there and with all these people, the feedback is like, there's just such lovely people in this room. It's always so great to come to Forum events. I feel like I'm not only getting tremendous value, but it feels very accepting and great to be there.
yeah,
So yeah, some of it is marketing and how we talk about ourselves, but really it comes down to like, yeah, can we show up for founders and truly help them in the way
yeah,
that they will rave about us when they are out in the world? And can we do the same thing when we're interacting with people who aren't part of our ethos yet or aren't part of our world, but that if we show up in an authentic way and make sure that the experiences that they have with us are positive, like
yeah,
those investors will send us companies to invest in, and those people that we meet will maybe turn into founders one day and they'll come to us when they're ready to start a company.
yeah. A lot of the people that will tune into this and listen to this Q&A, Olivia, will be founders who are looking to raise funds, of course. And they're probably wanting to pitch to you, bearing in mind your reputation. And so what piece of advice would you give to them if they're looking to get investment from Forum and yourself? How can they kind of stand out, I suppose, from the rest?
Yeah. Well, I would say we're always eager, to talk to folks. So definitely reach out. We have a link to pitch us on our website or can email any of the team members. It's our first name at forumvc.com. So easy enough to find. But I would say the way to stand out, we'll take a lot of first calls. I think we are a fund that like loves inbound, loves our pitches that are coming inbound. We are certainly not someone who's like, oh, we don't look at inbound. So that we take a ton of calls there. I would say the best piece of advice is, in a first conversation with an investor, it's sort of like a first date and you're just kind of trying to get someone interested to have another conversation. So spend a little bit of time before you get, practice with your partner or your cousin or your friend, someone who doesn't really know that much about your business and think about that kind of narrative and story that you're going to tell that articulates, that problem, this big market opportunity, and what you're doing to solve that, and some of those early signals as to how that is manifesting that you are solving this problem.
Yeah.
And yeah, rehearse that kind of 2 to 3 minute narrative. People might pepper you with questions, and it might not be this like formal pitch in that initial call, but I think the more you can think through that little narrative and being kind of concise and compelling in what you're telling someone, the investor will double click on all the things that they want in that first call, but you're really just looking to pique someone's interest enough to want to have another conversation with you.
Yeah, and I don't want to name drop another investor because this Q&A is all about Forum, of course, but I heard one of the partners of Sequoia mentioned the other day that it's telling a story is the most important, as you kind of alluded to there, having founders when they see founders that can tell a really good story, that's convincing, that's going to make them invest. So yeah, it sometimes comes down to basics, but how compelling is your story, how engaging is it, and what are you trying to solve ultimately?
Yeah, and I think that story is a good indicator of a lot of other things too, because you're going to have to tell stories to get your early employees to quit their nice jobs and join this thing that's unproven. You're going to have to tell stories to your customers about what the future is going to look like and why they should work with you. So much of your role as a CEO is around storytelling, and yeah, people make irrational emotional decisions. Everyone will, go back and reinforce that decision with maybe data and numbers that reinforce that. But yeah, I always say, like, think back to times when you've made decisions. So many of those are probably moved by feeling and emotion. And that if you're able to convey that to an investor in a conversation, I'm sure you started, this company for a reason. Every founder out there, you have a story or nugget as to why you chose this, why you decided to take a risk to begin this business. And I think there's so much power in being able to share that story with people, much more powerful than just kind of clicking through slides and, talking about what's what.
And just conscious of time, rounding off with a couple more questions. If you had to swap a role with a founder of a startup, who would that be? And what would you hope to learn from that experience, Olivia?
Oh, if I could swap roles. Oh, that's a tough one. There's lots of founders in our portfolio that I would work for. So I think that I don't know if I have one company on the top of my head of like who I would switch roles with, but there are many founders in our portfolio that I've said, like, I would totally, I would work for you, like, that I think are just building really incredible businesses. And some of what I appreciate about us being a generalist investor is that you do get to spend a lot of time learning from subject matter experts in a way that, I would not, being kind of on the outside of that. And so have learned so much about everything from, decarbonization to lending infrastructure that I never would have known had it not been for companies in our portfolio. But I think that's one of the great parts about being an early stage fund is you kind of get to be this sort of fractional operator in a lot of different businesses, which is a ton of fun.
Yeah, and if you were in the world of venture capital, where would you be?
If I wasn't in the world of venture
If you
capital,
had the choice to do anything, other
anything.
than just relax in Barbados and sipping pina colada.
I mean, if we're saying a realistic thing that I would be, I would likely go back onto, I'd love to get back in on the operating side if I wasn't at a venture fund. So whether in an operations role, marketing role, chief of staff, those are all things that I think are really interesting. I'm especially excited about kind of the healthcare space. So that's something that I would love to spend more time in. If we're talking about fantasy world, I like to run ultras in my free time. So maybe I
I
would be
saw
like
that,
a professional trail runner.
Amazing. There we are. That's not a bad second career.
Yeah, right.
Looks like you're balancing both right now. So
yeah, that's just my side project. Yeah.
Yeah, absolutely. And just one final question. Any particular podcasts or books that you're reading right now that could be helpful to our founder tech community?
Oh, the book that I'm reading right now is not helpful to the tech community. Um, it's The
Maybe they can
Martian
listen.
by, well, it's The Martian by Ray Bradbury. I think the
Okay.
themes of it maybe are applicable of this idea of um, how humanity thinks about new and unconquered lands and like what it looks like to explore new places and the mindset of going somewhere where you think you are the superior species. So this is
Hmm.
like people traveling to Mars, but this was written in like the 1940s. So more sci-fi-esque, but I would say podcasts that I really like if you're into the world of kind of like health and biology. Peter
Mm,
Attia's The Drive. So we're
mhm,
spending a lot of time both in our studio and at Forum thinking about like medicine 3.0 and longevity. And I think that's a
mm.
great podcast. You definitely can't listen to it on 1.2 speed or you'll miss a lot of information. So that's the only downside there. But I would say
Yeah.
that that is one that is great. One that's underrated that I think is useful for founders to get a sense of how investors think about evaluating pitches is called The Pitch.
The pitch.
I'm
Heard of
sure,
that, yeah.
yeah, I'm sure some folks have listened to it, but I think it gives you a really great kind of frame of reference of the types of questions that investors ask during like a first conversation
Yeah.
um, with a company and can give you some insight into how they think about kind of evaluating the opportunities and why they pass. It's like a live format where founder pitches live, they pepper them with questions and they make a yes no decision and they do a follow-up
Mm,
conversation with the founders to get a sense of um, yeah, did the investment pan through pending diligence, like what happened in that diligence process? So I think that's a good kind of look behind the curtain for founders who are thinking about like how are early stage investors evaluating
yeah.
startups.
Yeah. Brilliant. Well, that was awesome. Very insightful. I think I can see the next episode now, your career as an ultra marathon runner. So
I
yeah,
can't
all the
wait.
insights in
That'll be the
that.
next one. I'm until then I'll be just tuning into the Olympic trials this week for track and field. And that's been my evening
That's a
activity. But yeah, I really appreciate you having me and I really enjoyed the
yeah, no
conversation.
worries.
All
Brilliant. Thanks,
right.
Olivia. Take care. Have a good one.
You too. Cheers.
See ya. Thanks. Bye.